Welcome to the Big Fat Real Estate Checks podcast with Marco Kozlowski, where we help investors like you get the knowledge and skills you need to replace your JOB with passive cash flow for life.
Hey everyone, welcome to Big Fat Real Estate Checks. I hope everyone has had a phenomenal new year, and we're now in 2022 and our first podcast of the year. Very excited, and I want to welcome back Gabriel Arish and Francesco Galluccio, who I both had the pleasure of seeing over the holidays, which was a lot of fun. And welcome back, guys, to wherever you are now. I know Frank is back in Chile, Canada, and Gabriel is now a Floridian, so congrats on your move. I know it can be terrifying, but I know you're going to enjoy your journey very much, and that's the whole reason why we get in this business, so you can live where the hell you want. You know, we invest where it makes sense, so we can live where it doesn't make sense. So that's kind of the whole reason we're into this. So again, this is Big Fat Real Estate Checks, all about cash flow. If you have not listened to our first 10 podcasts, please do. It explains asset-based lending, how you can get in with none of your own money, if that's something that you want to do, by buying assets at the right price and not necessarily having to have a down payment, not because it's get rich quick, but because you're protecting the lender by buying it at the right price. And the objective is to get as many assets as possible, so your cash flow is taken care of, and we are buy and holders. Buy and hold, get as much cash flow as possible. But funnily enough, we're all exiting properties right now. In fact, we're selling off a lot. And big question mark is, well, why in the HE double hockey sticks, Marco, would you ever want to sell property if it's cash flowing? And there's a lot of reasons to that, and we're going to have a quick debate around it. And who would like to start it off?
Yeah, I can start it off if you like. Welcome. Happy New Year to everyone. Happy New Year. Hope everyone had a great one. You know what? This topic came up because I was reading an article the other day up in here in Canada. Yes, in cold Canada. I'm so jealous. When I look at the temperature and the weather from Toronto down to Florida. But
it was 82 today.
Yeah.
It's only 22 right now.
Gabe said it's a bit cool. It's 22. You haven't even been there a month and already you're rubbing it in, but it's okay. Yeah, it's like minus 9 or 11 here. So it's terrible. But anyways, I was reading an article because a lot of people up in Canada are, especially the young folks that are getting married and or looking to buy their first home. A lot of them were holding off, and there was an article saying that the mortgage brokers are actually they're very busy. By the hour, they're actually increasing sales because people have realized, especially up here, that property homes are inflating at extraordinary rate. They're going up higher. They thought there was going to plateau. And they feel if they don't get into a property now, even though it's well over value, they feel if they don't get into it now and they wait, it's just going to go higher and higher and higher. That's what we're seeing in all markets across, not only in Canada, but in the U.S., especially Florida, which I know, Marco, you have some properties. I have some properties up there, down there, excuse me. And most of my single family homes have, quadrupled in price. And it's definitely a seller's market right now. So, yeah, we always preach to buy and hold, to have that residual income. But sometimes you have to always look and reflect what the economy is telling you. And right now, the economy is in a favorable position where, you can liquidate a property, take that equity that you made and put it in another multifamily or in a motel where there's underperforming assets. So these assets, the single families, some of the multifamilies, they're skyrocketing. So if you sell them, get that cash and purchase a property. I know, Gabe, you're looking at hotels right now, which is still fairly under market. A lot of people are still staying away from it because COVID numbers, everything's going up or whatever. People are fearful.
We're
of
okay
traveling.
with that. Stay away.
But that's fine. But I'm just saying, so the market shift on asset class in this. So single family for now, like for myself, I just, one of my tenants just moved out December 31st. I gave her till the end of January, because of the holidays and all that. But she'd start to vacate. Phoned the realtor today. They're getting on it right now. And hopefully by the end of the week, it'll be listed for sale because prices are going substantially higher, and hopefully I can find something else that's under market or underperforming.
It'll be sold in like 2 days. That's how things are quickly.
There's no demand. There's a lot of demand. There's no supply. That's the problem. There's no supply.
So, if Gabe, if you want to shorten what Frank just said in bullets for the listener, because there's a lot of great points in there. And I'm not making fun of you, Frank, but you said a lot. So, you bought, it quadrupled in value, and now there's all this equity that's dead equity. It's not making you any money right now. So the question is why sell? Gabe, I don't know if you want to, re-say what he just said, but I think it's worth saying at least twice, even 3 times.
Well, it's not a question of just repeating. I think, you're going to sell when you feel you need to sell, when it's the best option for you, right? I mean, if the price is quadrupled and you want to get your equity out, I mean, you can always refinance, but you're not going to get the full equity in there, right? You're going to only get a percentage of that equity. So selling is the right move. It's a fast market. You're going to sell. You might actually get an overbidding, a bidding war. Really, I think market shifts will determine when it's time for you to sell. And I think the real question is how to recognize that market shift in order to be able to make that best decision. So that's I guess my 2 cents on selling at this point. But there's other reasons you could sell. I mean, I just moved. I had a bunch of property where I was. Is it easy for me to manage, a bunch of units from afar? It's possible. But with a market, like you said, that's this hot in Canada, why not just cash out the chips on those and then just redirect them into something that's going to be providing a better return, especially not just now, but I guess over the long run. Because if things, if you're correct, Frank, and things are going to continue to inflate, and I think all indications are that, and the term inflate is correct here, because this isn't driven uniquely by the fact that people are rushing to buy. I think people are rushing to buy because of the inflation factor, and the inflation has given them FOMO essentially. And
the rates are low.
Yeah.
So you have 2 things. Yes, you're aware that it's going to cost you more, but because the rates are so cheap, the payments are going to cost you less. Mm-hmm. If the Fed raises the basis interest, a point, that's a huge difference in your mortgage payment over time. So
absolutely,
the lower the rate is, the better it is. But from a economics point of view, we buy low and sell high. And if we bought really low, like the property I bought in Daytona for less than $50,000 and I sell it for over 200, it's a good time to sell it. And I sell it instantly, basically. So I can take that money and then roll it over into something that's of less, that has a potential much more interesting value, and have either that capital grow, or because I bought it right, I can put extra finishes into the property or into the multifamily to make it worth even more, to change the class from a C class to a B class, for example, where the rents can now be increased significantly more, increasing the value even more, allowing me to refi, pulling that money out if I want to, or sell, or do whatever I want to do. So, and when the market does change, sorry, Gabe, I know you want to talk about this, but just one last thing. When the market does change, just like it did in 08, 09, where we were buying properties for $25,000 a pop, 3-bedroom, 2-bath with a pool in Vegas, and buying those 10, 15, 20 at a time from banks, that's going to happen again there's going to be another crash. It's inevitable. Nobody wants to work. There's a lot of money being, doled out there. It's just a matter of time before something does break. And I'm not terrified by it. I'm excited by it, because I'll have the ability and the knowledge to know exactly what to do with it. So, Gabe, I know you want to add to that.
No, I just wanted to add that, everything we've discussed so far are more or less single family dwellings that are being sold, right? So this is where the market's at. So none of us have sold a hotel. None of us have sold any multifamily properties. That's also...
Well, hang on. We all sold some... We did. We sold, mobile home parks that were outliers.
Yes, but again, these weren't... This wasn't a market factor sale. So the sale, it's true. Forgive me. We did sell a mobile home park. But that, I know
you made all that money and you get amnesia right away. It's like, what, a few $100,000 wasn't enough, so I need more. I understand.
It was driven by a management decision. It was our property manager wanted to retire, and it was very difficult for us to find property manager. But that is another reason why you would sell, right? I guess if
Absolutely.
We're staying with the topic, but that wasn't driven by the market shift. I think what I was trying to say is that none of us have sold anything above single family dwellings or residential properties, if you will, because of this market frenzy. We because the management happened at the time where the market was hot. It made it easier for us to actually sell, even though it was still a little bit more complex just because of where it was and the fact that it's a mobile home park. But, in terms of the market shift itself or where the market's at right now, that's what's selling. And I think for a lot of us, especially once you have the tools to create these deals that are extremely lucrative and that are really, they become high cap rate deals, if you will, because we have this expertise and anybody who learns the process has that expertise, it only makes sense to sell something, especially in a single family home that has quadrupled in price, for example, even if it's only tripled or doubled, sell that and then, maybe use some of that if you want to get into something bigger, a multifamily that you're going to then keep pretty much forever, because multifamily, the cycle never happens where you want to sell that. I think, you could, the cycle will happen more if you need to sell because let's say it's owned by a private equity fund and they have a 7-year limit to holding the assets and you got to liquidate. But in theory, because of the economics of multifamily, typically you'll probably end up keeping that for most of your life.
And your kids' lives and their kids' lives. Yeah. It's generational wealth money.
Yeah. And that's what you want to reposition. Yeah, that's what you want to reposition. The way we were thinking about it, or anyone should be thinking about it, if you hang on to your single family, for instance, and you're making just say $10K net a year, yes, you do have built-in equity into that property. But if you can take that equity, cash out now, because you can always tap into that equity by doing a line of credit on that particular property. The fear in that is, or the fear that I had in that is, what happens if when there is a crash? It may not be as significant as back in 2008 or 9, but there will be some kind of adjustment in the market. So what happens if you tap into that equity? The bank can always demand the loan back if your house is worth, 220 or 200,000, let's just say 200,000, and it drops down to 150, and now the bank's over leveraged on your line of credit, they can call that back. So I didn't want to do that. So my thinking was, okay, if I'm making 10K a year net on that single family, can I use that equity if I sell the home? Can I use that equity and double or triple that net and still have, even if the multifamily doesn't even go up and I don't have even much equity in the multifamily and I leverage the shit out of it, am I making more than $10,000 a month? So I can double it, make it $20,000. So in that case, it would be a good move doing that because it's more about the residual than the equity. Because I know a lot of people, they boast and they say, oh, look how much equity I got on my property. Look what my net worth is. Well, listen, your net worth is great, but it's not doing anything for you today. Your net worth is only what it is when you crystallize it. And when you crystallize it, you sell it. And then when you sell it, you got property taxes, you got capital gains, you got to pay fees, expenses, realtor, closing costs. And in the end, what are you going to do with what you're left over with? I know I'll just buy another property. So why the hell did you end up doing that whole process just to go buy another property? So I don't know. That was my... Sorry, Frank. No, you're right. And it's basically math. So you had let's say $160,000 in equity, and I think you said $10,000 a month, but is it $10,000 a year? Yeah. Okay, I just want to make sure because $10,000 a month on 160 equity, never sell that because that's great. That's a great return. But if it's $10,000 a year on let's say $100,000 in equity, that's a 10% return. If you can take that money and make a leveraged 30% return, which we do constantly, right, on your cash on cash returns. In fact, we don't even use money unless it's a 30% return, leverage return plus, which we see those all the time. If you listen to seller calls, you can hear us do that constantly, 42, 60, 80, 35, all the time. That's a leverage return, meaning that the bank has a debt and then the money that we put in, the net after debt service from the cash that we put in makes us that return. So if you put in 100, then you're making 40,000 a year net after that deposit. But yeah, the numbers will tell you as well. And if it's a pain in the ass, which, happened to both Frank and to Gabe with management and dealing with outliers, or you've invested heavily all over the country and you want to consolidate your holdings into, a couple states versus being spread out all over the place, which is exactly the mistake that I made when I first started. I was everywhere. And now as I mature, I want to be more concentrated in specific areas so I don't have shit everywhere. So, but at first, just buy whatever you can and then make those decisions later if you want to sell or not. As long as you buy it right and have good management, you're going to be fine.
That's right.
For sure. Yeah. So mistake that I've seen on, hey, my house has gone up significantly in value. I want to sell it and then I'm going to go buy another house. Well, then you're playing apples and apples at this point, and you're going to have to pay more for whatever house that you're going to be buying next. So what's the point in selling your house to go buy something that's more anyway? You're not really trading Unless you get a really great deal on the other house, then it makes sense.
Unless you're moving down to Florida, right? And you sell something
Or buy low, sell high, right? Buy low, sell high. That's the goal, right?
Or rehab, yeah.
Yeah, so buy low, sell high. But you can make those, if there's a house that you absolutely love and it's your forever home, then you can break all those rules. Your house, you don't have to follow rules on your own property because it's where you live. It's your sanctum. It's, your spouse's cave. It's where you want to grow roots. And if it's the right place, right time, like in Gabe's case, it has to be in the zip code for skating lessons that are necessary and the school district. And, there's all these factors to look at. And that's the zip code that he has to live in. He doesn't give a shit. He doesn't want to pay through the nose, but he's going to do whatever he has to do to take care of his family. So different conversation at that point. And he'll liquidate whatever he needs to in order to get what he needs for his family. And that's why he busted his ass in real estate to begin with, is so he could provide that for them. Where Frank just wants to stay in the cold and just have his family suffer.
Build some snowmen.
Yeah,
women.
that's just how Frank operates.
Or non-binary snowmen.
Yes.
Non-binary snowman.
I miss you guys already.
Oh my gosh, that was funny. Yeah, put a carrot between the legs.
Yes.
Or not.
Yeah. Well, maybe it identifies as a carrot between the legs. Who knows?
Maybe it does.
Yeah. Or the bottom ball. Anyway, let's
respect.
Let's step away a few steps from that.
Yes.
Completely. But so hopefully this was at least mildly entertaining. And so the big question mark is always focus buying the best you can. At the best rates of return that you can. And when it's time to sell, the number should tell you. And in this case, we have a lot of single family, and I just choose because of how quickly things sold. In fact, the house across the street sold in an hour. And then I realized I need to start putting my houses on the market now. And I've sold quite a bit of them. And they just fly off the shelves. And it's time to do that. So take that cash, do something else with it that will be a much, much better return. So that's the game. Thanks, guys, for listening. Appreciate you both for being here. And listener, you're awesome. Appreciate you very much. Like it, love it, share it. If there's anything that we can do to help you grow in your journey, we'd be delighted to hear from you. Marco@marcokozlowski.com is the email. Marco@marcokozlowski.com. If you have any topics that you'd like us to share, please let us know. We're always looking for things to discuss and shed light on and give value to. And if there's something that we can do to help and serve you as a listener, we're definitely all in. And we're very proud that we're almost at 1,600 5-star reviews. Like to get to 2,000 by the end of January if we can. And if you could help us do that, we'd definitely appreciate it. So if you have any humans in your life that you want to add value to have them work less, make more, and leverage other people's money, please share this podcast. We would definitely appreciate it, and you would be a rock star. More of a rock star than you already are. Thanks, guys. Appreciate you. Have a great year. Make 2022 your little biatch, and look forward for you to get everything that you work for, and whatever you work for, you deserve, as long as the intent is there. I appreciate you guys. Take care. Bye for now.
If you like this episode of Big Fat Real Estate Checks, then show some love by leaving a comment and a good rating. Also, as a thank you for tuning in today, we've got a special free gift. The journey to passive cash flow for a life starts by finding deals, and it's easier than you think. Simply go to getdealsbytuesday.com, enter your email address, and we'll send you a free quick start course called Deals by Tuesday. Even if it's 11 p.m. Monday night, this course will show you how to find discounted real estate deals by Tuesday. It's that fast and simple. Go to getdealsbytuesday.com and start your journey toward life-changing cash flow today. Thanks for tuning in, and we'll see you on the next episode.